Hello, good afternoon. You're watching BQ Prime. Earnings seasons continue in a full swing on BQ Prime today, and we're looking at the earnings of Muthoot Finance today. Now, Muthoot has reported a strong set of numbers over the quarter and also revised its AUM guidance upwards to about 15%. I'm sorry, they revised their credit growth guidance upwards to 15%. Joining us today is Mr. George Alexander, Managing Director and CEO of Muthoot Finance. Thank you so much for joining us today and making the time to speak with us.
Thank you.
Right. So a few interesting things in the results. So I want to start with one thing. Now, you've indicated that you want to, increase the mix of other types of loans into your overall AUM mix as well, expanding beyond gold loans. Now, can you help us understand over FY24, how are you plotting this out? How much, the weightage will each category start to occupy as we go through the year?
As of date, the non-gold loan category, including the microfinance, occupies about 11 to 12% of the portfolio.
Mm-hmm.
So going forward, we should see this reaching to 15 to 20% in the next 4 to 5 years. So maybe 20% in the next 4 years is what we would like this to become.
Okay. And please go ahead.
And we are now just testing the waters for this non-gold loan portfolio. Of course, microfinance is a given thing,
mm-hmm.
but the other areas like the personal loan, the unsecured business loan,
right.
Those are things where we do not have the intrinsic capabilities, etc. So actually, what we are doing is we are offering these products to our existing customer base.
Mm-hmm.
The existing loan customers is to whom we are offering the micro personal loan and the small business loans.
And what are the ticket sizes for the micro personal loans and the small business loans? Could you tell us?
Micro personal loan, our ticket size is up to 1 lakh of rupees.
Okay.
And there it is without a collateral and given for 12 months.
Mm-hmm.
It is EMI, maybe 9 months, 12 months. EMI is for the micro personal loan.
Okay.
That is given to customers who have a good track record with us and also who have a reasonably good credit history. That
Mm-hmm.
is for micro personal loan. For the small business loan, it is 1 lakh to 10 lakhs. Here also it is unsecured without any collateral.
Okay.
But again, customers, our own customers who have a good track record, payment report, and also people who are shopkeepers, traders, and probably all the small MSME business, etc., who are actually customers of Muthoot, but who would like to get some loans without a gold collateral.
Okay.
And that is 24 to 36 months.
All right. Now, and on the housing segment as well, now I know you're focusing on the affordable housing segment in your home loans. Could you tell us what is your expectation over FY24 for that segment? Because with rates elevated, there's been some softening in demand in that segment, right?
Yeah. See, we had been doing the affordable housing finance where the average ticket size is 10 to 12 lakhs of rupees. That's mm-hmm. what we have been doing. We had gone a little calibrated in the last 2 years. And in the last 4 months or 6 months, we have again restarted doing this in most of the branches. And today we have an AUM of about 1,200 crores, mm-hmm. which we would like to grow to 1,900 crores by the end of the year.
Okay.
Here, this company, we have also brought in a new CEO, new CEO who has just joined 3 months back. And I think with his coming in also, we should see this going forward. And we are starting 26 new branches in the home finance division.
Okay. So just to come into the core business now, right? Now, gold loans in the last couple of years were somewhat softened. Over the last quarter, year on year, we've seen about a growth of 8% in the gold loan AUMs. I know you've revised the guidance upwards for overall credit growth to 15%. How much of this is contingent on gold prices also moving up as opposed to, just organic growth in the segment?
In the last, from October onwards, we have been seeing better demand for gold loan. In mm-hmm. fact, a good part of the third quarter also, we had half the third quarter also, we had seen growth coming in. And the maximum growth happened in Q4. The business economy, business and sentiments are improving. People are also asking for credit. And certainly the gold prices also helped because those who were earlier able to borrow maybe 100 rupees, they may be able to get 110 or 115.
Right.
But then we have also added new customers new customers have definitely come in, and the customer base has also increased.
Right. And you mentioned your plans to expand your branch networks even further. I was looking at your investor presentation. It said about 36% of your digital loans are now gold loans. Sorry, of your 36% of your loans for gold loans are coming through digital channels now. How are you expecting that to play out over FY24? Is that something you're seeing significant traction in on a continued basis?
So I think I have been clarifying about digital and gold loan. See, a gold loan cannot be given digitally.
Right, yeah.
We can acquire a customer. Probably we can acquire a customer, or a lead generation can happen digitally. Once it happens, the customer either has to come to our branch with the gold, or in some cases, we go there and collect the gold.
Right.
That is what. So, but then the transactions, once the gold comes in, almost very good, 80% of our customers transact digitally also. That means they take the payment digitally, they pay the interest digitally, they pay the principal digitally. But next time, when he wants to take back the gold, he comes to the branch. So digitally, these people have been very well adopted. We have been adopting them, asking them, requesting them, and maybe helping them to adopt digital transactions. But then digitally, we only acquire customers.
Right. Okay.
I wanted to make it clear. Yes.
So do you expect that to become a larger part of your acquisition channel going forward? It's at about 36% right now, right?
Yeah, I think it should start going forward better, because newer and newer customers are coming in newer areas also, where they see about the gold loan, they understand about the gold loan digitally, and then we engage with them through call center, etc., and finally persuade them either to come to the branch or here.
Okay. Understood. Now, I also want to get some more color on the asset quality picture here. I know you've sort of said that the asset qualities deteriorated quarter on quarter, because of somewhat people asking for longer times to repay, even though they've paid their interest on it already. Why would they want to do that? Could you help me understand a little bit better that they've already paid their interest, so why are they not repaying in full right now?
Actually, our average loan tenure is only 3 to 4 months.
Right.
By 12th month, more than 90% of the customers have taken back their gold. But only another 10% or 5 to 10% continue with it after 12 months. And even there, a good percent of them would have paid part of the interest also. Nobody likes to lose their gold, especially today, the gold price also going up. The option for us is after 12 months plus the 90 days, we have to auction the gold. So when we send them the notice for auction, they come up and request for more time. Usually, when we see that we are in the money and we are not actually losing money, then it is definitely better for us to accede to the request. So these people request the branches. And the branches confirm to us that this will has come. Maybe 90% of them take it back in the next 3 months. Even if still they are not coming, finally we do a little bit of auction.
Okay, just a quick follow-up on that. This sort of behavior is being seen in branches across geographies that you work in, or specific areas are showing?
No, sir. It's throughout everywhere. People's reluctance to see their gold going for auction is universal. Nobody would like to do that, because their investment is much higher. Though we value the gold at 100 rupees and give them 75 rupees, their investment in the gold is about 120 rupees, because they have paid 120 rupees to purchase the ornament. All these are ornaments. So for them, their equity in that is much higher than the 100 rupees we have valued. And on that, we have only 75 rupees.
Okay, understood. Now, one of the things that was also highlighted by your quarterly results was that overall intensity in the segment with the opening of the economy, NBFCs and banks have sort of reduced some competitive intensity in the segment, is what I remember reading somewhere. Is that true? Does that bear out in your experience, and how does that sort of impact your growth aspirations as well?
Yeah, I think it's not that banks were coming; they were actually giving to new set of customers, and that was actually deepening the market. And the market was expanding also, because hitherto people who were not comfortable with taking a gold loan from anywhere, and banks also are very, very aggressively advertising for gold loan. They would have started using gold loan as a good credit option. So that is the market expansion. Then there was a question of banks. We had taken it to the regulator also. Banks giving more LTV than the 75%. We have taken up with the regulator. I think the regulator has also ask some of the banks not to do that. And we see that quite a few banks have now gone back to the 75%, although a few of them still do it. I'm sure after a while they will also. Once that that parity is there with us and the banks on the LTV, I think there should not be any room for us not to grow.
Okay, understood. Now, I just want to close out with one final question. Of course, there's plans to expand branches. There's plans to, there's also some movement expected on the cost of funds, and there's growth aspirations as well. So within keeping all of that in mind, what do you plot out for your net interest margin trajectory over FY24? Are we expecting to see further improvements down the line over the next couple of quarters?
No, our net interest margin had come down in the earlier 2-3 quarters, mainly because of the ultra low teaser rates which you had given in maybe about 3 quarters back. Now that is all behind us. All those accounts have gone away. Now we are back to the earlier thing. So we think that we should be getting about 19% plus of maybe the yield, which should translate to about 10%, 10 and 11% of net interest margins.
That's for the entire year?
Why our net interest margin is high is because our capital adequacy is very high. Our own funds is about 30%, which is a zero cost funds.
Right. So the 10% net interest margin you mentioned, that's for the entire year, right? FY24?
I think, yes, we should be able to do that.
Okay, understood. Thank you so much for joining us again, sir. It was great to get the update from you, and we look forward to catching up with you again and learning all more about the Muthoot Finance's work.
Thank you. Good day.
Good day to you too, sir. And thank you to everyone for watching.